This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, there seems to be a lot of talk about LinkedIn, the big internet IPO from mid-May of this year, on the street right now. Company reportedly beat consensus estimates and raised guidance for next quarter in its recently released earnings report as a public company, but its stock price seems to be under some pressure here in the wake of news that the company is going to be issuing a secondary stock offering. Our stock strategists, Tracy Reineck and Bill Wilton, are here now to discuss this further with us. Tracy, the fundamental business of this company is being a social media company. But the fact that there seems to be a disconnect between the stock price and the earnings news. The earnings news was good.
Yes.
So is there anything in the fundamentals that tell us why there's this disconnect between stock price and the other good news that's out there?
No.
And that's it, folks.
I mean, like you said, they did have a good earnings report.
Yeah.
They're not one of those that, kind of comes out the gate and then disappoints. Mm-hmm. So they've been growing the business and they expect to, and the analysts expect it to continue into 2012. They had, decent revenue growth and they're growing quickly overseas. There's a lot of open market for them overseas because, a lot of their business is really the subscription business with people, mainly corporations, signing on in order to search through all the profiles.
So that's how they make money?
Yes.
I see.
So that has been increasing, and this last quarter was better than any of the analysts expected. And as I said, they're growing overseas as well, where they have less competition. So this is all good. But as you've been talking about, they did announce a secondary, which I think is spooking a few people out.
Yeah, $500 million in shares in a secondary offering. No
Right.
timetable on when that's going to happen.
Right. It probably will be soon, just because the lockup period for the initial shares for everyone who got them in the IPO, who works with the company or who had some kind of ownership connection to the company, is on November 21st.
I see.
And apparently in the secondary, some of the people who own in the lockup shares have agreed to delay selling for up to 90 days. In order so that all these shares aren't coming on the market at the same time and, suppressing the stock price.
So, Bill, from a chart standpoint, I mean, there's only about 7 months of a chart on this because it's an IPO that came out this year. But the IPO saw the shares surge as high as 109% during the day after it came out, and then kind of tailed off from there. What's going on?
Yeah, and it was definitely, a wild IPO. We see these all the time. They can go all over the place. And one of the reasons that we saw that in this particular case is because such a small percentage of the shares outstanding were actually available to the public. So when you've only got about 5% of outstanding shares and you've got the entire public market trying to get in here, you're going to see these artificially inflated prices. And you mentioned that shares did end up coming down, and that's usually because you can only find so many people willing to pay however many 100 times earnings that they're going for. They're at about 15 times sales here. So it is a very high valuation stock. But right now we're starting to see some decent support just above $70. But, like Tracy said, with the other offerings, with the lockout periods expiring, how long is that going to last? There's a fundamental driver that's probably going to push shares well below that in the near future. And like I said, it's a classic case of supply and demand. With only a few million shares open to the public, and now a glut is going to be hitting the market, over the next, call it 6 months, a year, even if it's 2 years. Mm-hmm. That's still a lot of people that are able to sell more shares. Also, you're going to see more shares available to short, so people that are bearish on it can start shorting it, putting even more pressure on the stock.
So that's really what's pressuring the stock here is the skepticism over what this glut of shares on the open market may do to the stock price. Right?
Yes, because you have to think a lot of the insiders have been with the company for a couple of years, and with a lot of these tech IPOs, they are rewarded through the shares. So once that lockup period comes available on the 21st, a lot of people will be selling instantly. given what Bill has said about the float, and they're expecting maybe up to 32 million shares to come on at that lockup period.
That's a lot of shares.
Right. That's why they're doing the secondary to try to keep some of the shares off the market so it's not all flooding at the same time.
I see. All right. It's an interesting situation
Yeah.
on this popular company. That's the latest on LinkedIn with Tracy and Bill. I'm Terry Ruffalo.